Nitin Aggarwal, Senior Group VP, Head BFSI Institutional Equities at MOFSL, joining us this morning. Nitin, good morning and great to have you on. Is banking, BFSI, the big comeback story as we hope that this leg of the recovery continues?
Yeah, hi, good morning and thanks for having me. So certainly, we have seen a good pullback in the banking stocks, and that is primarily driven by valuations. Because while on one hand you have earnings which are moderating over the last couple of years, and we see FY26 to be a year wherein the earnings bottom out, but I think a sustained performance in the sector can be visualized more from the second half of 26. And in anticipation or the visibility of this earnings recovery is something that will drive structural performance of the sector. Probably until then, you will have bouts of sharp rally, something that we have seen in the last 10-15 days, and the valuation catch up will happen because the P ratios or the price to book, as we were talking about, certainly has seen a fair bit of derating, and most banks are now trading below one time peg. So to that extent, valuations will continue to support the performance, but I think earnings support is also needed. To that, visibility will likely show up from the second half.
Okay, let's quickly get to it because we have 5 minutes to opening, Nitin, and this is important. We had a very elaborate setup there from Harsh, and in conclusion, Kotak Mahindra Bank, HDFC. I want to get your take on both of these specifically in fundamental terms on whether you see that inherent strength coming in.
Right, certainly. So Kotak, one name which has been stagnating for years, and last few months, 3 months, we have seen a fair bit of outperformance by the stock. And I think the bank is well positioned now to deliver a healthy double-digit growth somewhere in the high teens over FY26 as they benefit from the lifting of the ban and the entire bank pursues aggressive growth in the consumer banking space. So to that extent, I think it's still amongst the very few banks which can deliver you high teens growth along with a 2% plus ROA. And that has enabled this pretty good re-rating in the bank over the recent months. HDFC Bank, on the other hand, is a name which is still consummating the merger in terms of the operating performance, and which is going to keep getting better over the years. It's still going to take some time because CD ratio is still elevated. So to that extent, growth in the near term will remain suppressed. But the bank is on track to deliver an improvement in the operating performance led by recovery in growth and margins over the next 2-3 years. So which is the reason that we continue to like HDFC Bank also from a long-term outlook.
Nitin, hi, good morning. A quick view on the PSU space as well, because often, obviously, and then that argument has never changed, right? They are trading at a discount. They will likely continue to trade at a discount, but still, the argument has to be made that they are very attractive right now, valuation-wise. What would you buy if you were to buy in this space?
Right. So if you look at PSU banks had a very sort of a glorious rally in FY22-23. And last 1 year, we have seen a fair bit of sort of stagnation to derating in the PSU bank index overall. And that pretty much aligns with how the earnings trajectory is changing, wherein from a high double-digit to even triple-digit earnings growth in some quarters. Now we are looking at a 6-7% earning growth outlook for the PSU bank sector as a whole. Valuation certainly has derated, reflecting this earnings outlook, and looks very attractive in context to how the ROAs and ROEs are still placed, wherein we are estimating these banks to deliver 1+ kind of ROA and ROEs to sustain in high teens. So to that extent, we believe that these banks will collectively deliver 13 to 15% CAGR returns over the years. But given how the private bank space has also derated, our bias has been more on private banks in the recent quarters, and that remains. So we remain selective, and we continue to like SBI as a preferred buy in PSU banks, and followed by Indian Bank amongst the mid-sized names.